Cryptocurrencies, or the magical internet money. By now there's a very large amount of people who heard about them, to talk about them, but still it feels that there's not too many people who really understand what they are, how they work, and why is there such a huge fuzz around it lately. So if you are one of these people who is interested to learn more about the technology, wondering about the investment opportunities and risks associated with these kind of assets, then this video is going to be exactly made for you, where I'm going to go through a few basic guidelines on how to get started and give you a general idea what is the technology about and where I think it's headed. So stay tuned and please watch till the end. Now, before we get started, you should know that I'm by no means a financial advisor. I also have to tell you that I do own cryptocurrencies myself, so I can say that I have some sort of a vested interest to increase the global awareness of cryptocurrencies, because the more people are interested to buying it, obviously the higher demand will be there for it, and that might lead to long-term profits for me. I believe cryptocurrencies are absolutely fascinating. However, they do involve quite a complex technology underneath. So in this particular video, I don't aim to deep dive on that. It's more aimed for the absolute beginners who haven't worked with cryptocurrency before and are interested to explore these kind of digital assets. So before we discuss about the dirty money, let's take a look at what is blockchain technology, which is underneath Bitcoin and other cryptocurrencies. So simply speaking, the blockchain is a shared, distributed public ledger which involves all the transactions that are happening on a network. A simple way to imagine that is thinking about going on vacation with your friends. And then you go to bars, you go to beaches, and every time somebody else is paying for everybody's order. And eventually you just collect who paid whom in one piece of paper or some kind of application, and everybody can look at it. Now imagine the same, but on a much larger scale, when you would have a gigantic Excel that contains all the transactions between everybody in the world, and everybody can take a look at this gigantic Excel and see where the money goes. Now, of course, if everybody has access to this document, you can imagine that there will be some people who would, for example, prefer to spend money that they don't have, or to transfer money from some other people to their own account just by editing this document. Now, of course, if this would be possible, the whole system would not work properly. So this is where exactly code and cryptography comes into play, which ensures the integrity and the chronological order of all the transactions that are happening on the network. One of the greatest things about it is that it's all done by code, and there's no central authority like a bank or a government that would have control over this. Now, this for me personally is very appealing, which leads me to the next point. What are the reasons for investing in cryptocurrencies? I find it very important that the rules of the network are constant and transparent, and they are not changed as long as there is no consensus between the members of the network. Another thing that is very important is that Bitcoin and the range of other cryptocurrencies have a limited supply in the market, which means that as the global demand is growing to buy cryptocurrencies, the price of these kind of assets will also increase. Additionally, this technology is really truly amazing, and it can have much more use cases than just simply transferring money from one person to another. Now, it's great that I have listed this kind of arguments for cryptocurrencies, but let's put them a bit into the context, what they really mean. So to understand why it's really important, let's take a look at the US dollar, which is a globally recognized currency, and in many cases this is the benchmark when we look at what is the price or the value of some kind of thing that we want to buy. Back in time, people used to pay for stuff with gold coins. They had this in their pocket and were going around for shopping, and everybody understood the value of this. The reason for this is that gold is a noble metal with a limited supply on the planet. According to the USGS, a United States government agency, so far around 244,000 metric tons of gold have been found on the earth. If you own gold, you own a part of this 244,000 tons that have been found, and you own a part of this limited supply natural resource. Now, after some time, people figured out that going around with this amount of gold is, let's say, uncomfortable. You have a large amount of value with you, it can get stolen, and it's also kind of heavy. Now this is the reason why paper money was introduced, and in most of the countries this was introduced as a gold standard, meaning that a given amount of the particular currency could be exchanged to gold at a fixed ratio. This was the case, of course, also with the United States dollar, which was on the gold standard after 1879 until President Richard Nixon took it off from the gold standard in 1971. That's right, this year we are celebrating or mourning the 14th anniversary of this act. Now this was a crucial point, and we have to really understand what happened. Because basically what it means is that it was no longer possible to exchange dollar for gold in a given particular value, and it meant that the Federal Reserve had a much better control over how much is the money supply in the United States dollars. So to see the impact of this decision, let's take a look at this graph. You can see that the purchasing power of the dollar and the amount of money in circulation have drastically changed since 1971. As of 2018, there was an increase over 32 times in the amount of dollar in circulation, as well as combined with an over 80% drop in the purchasing power of the money. But as we know, history didn't end in 2018. Last year we had COVID. Yay! To mitigate the impact of the pandemic, the United States started quantitative easing, which is just basically a fancy word for printing insane amount of money and throwing it at the problem to make our lives less hard. If we look at the M2 money supply, you can see that almost 25% of all the US dollar in circulation was created out of thin air over the last 1.5 years. This is so impactful that actually the M2 money supply is stopped to be tracked and you cannot follow it anymore. Not very transparent if you ask me. Now one can only imagine what kind of impact will it have on inflation. Officials are trying to say that it's not that bad, however, probably I'm not the only one who's kind of surprised to see how prices are changing these days. Now we may look at it in a way that if you own dollar, you're basically being diluted by a central agency that is not really transparent and we don't really have control over it. Now this brings me back to the importance of the limited supply in digital currencies, and this I think has been one of the key factors in the recent times that drives the prices of going upwards of Bitcoin and other digital assets. So to summarize, Bitcoin can be viewed as sort of a digital gold that will retain its value and increase in price as the global money supply is increasing, as demand is also increasing towards Bitcoin. However, it also has a range of risks and we definitely should take a look at it. Being a decentralized asset that governments don't really have control over, of course, this is something that they don't really enjoy, let's put it this way. As such, it has been the target of government crackdown and regulations, and this doesn't really have a good impact on some kind of asset that is already quite volatile. And while I do believe in the long-term value of cryptocurrencies, it's always important at which price point will you buy so that you can have some kind of profit on the long term. And currently the prices are very close to the all-time highs. So it's one thing to keep in mind if you consider investing. You also have to be aware that there are some kind of technological risks associated with the cryptography. Today, these are state-of-the-art methods. However, with the rise of quantum computing, it might be possible to break some of the security features of current cryptocurrencies. And last but not least, it's also important to know that you have your own responsibility when you deal with cryptocurrencies. If you lose your keys, if you forgot your password, if somebody breaks your system, well, it's very easy to lose your assets. All right, so you've heard the advantages, you heard the disadvantages, and you still want to invest? Great. What should you do first? Well, obviously, research. First, your own financial situation. I said it before, but make sure you understand how much money can you risk and how much money you don't mind losing. The stock market has its ups and downs, but when you start dealing with cryptocurrency, it's way different. You really start to need to have a stomach to be able to endure seeing your portfolio dropping by 50% just overnight. It's normal, it happens. If you're okay with this, the next point is to research the projects that you are willing to invest in. Bitcoin is of course very well known, but actually there are thousands of other cryptocurrencies that you can choose from, each having their own value proposition and their market and the problem they are trying to solve. And make sure you understand the difference between market capitalization and coin price. Coin price just tells you how much is the cost of an individual coin, but it doesn't tell you that much about what's the value of the entire project. For example, if you find a coin that only costs $1 and you think to yourself, hey, how cool is this? This will grow, it will be like Bitcoin, it will also grow to $50,000 per coin. Well, keep in mind that Bitcoin only has a limited supply of 21 million. If your coin that you look at has like hundreds of billions in supply, well, the chances of reaching the cost of 50,000 per piece are very low. To get this kind of information, I suggest that you check out the website CoinMarketCap, where you can see all the cryptocurrencies ranked by their market capitalization, and you see the cost of an individual coin, their market capitalization, and the total supply, as well as other statistics. For example, how much did the price change recently in the last couple of days or in the last 24 hours. Now, another very important thing to research and to understand is that the crypto market is very, very dynamic. And just a piece of news or any kind of information can change completely how people perceive the future, which has a huge impact on the prices. And exactly because of this, it's very important that you want to take it seriously to follow reliable sources of information. There are a couple of YouTubers and Twitter accounts that I follow. I will link them below so you can check them out, that I found very, very helpful to help me on this journey. Now, once you've completed your research and you've decided which kind of cryptocurrency you want to buy or hold, you will need to find a platform where you can buy them, and you need to find a way to store them. So when deciding on which platform do you want to choose for buying your crypto, there's one very important difference that you have to keep in mind. It's the difference between exposure and ownership. Now, I obviously prefer ownership, and I think you should too. It means that you can actually withdraw your crypto from the exchange, you can put it into a hot or cold wallet, you can put it into any kind of interest account, or actually pay for some things with it. With exposure, you basically only get exposed to the price changes of the cryptocurrency without actually being able to use it or own it and transfer it somewhere else. And there are a range of platforms that only give you this kind of possibility. The trading apps that I mentioned in my previous video that are actually very good for stock market are not a perfect choice for cryptocurrency. If you want to use Revolut or eToro, Webull or Robinhood, you cannot really withdraw your cryptocurrency. As such, it is better to find an exchange that is reliable and has the features that you would like to have, and register on one of those and have your own crypto. If you're located in Europe, like I am, you have quite a few options to choose from. My personal favorites are Coinbase, Binance, Kraken, and Swissborg. Before deciding on these, of course, the first thing that you have to do is to check if this kind of platform is available in your country. The next point is checking whether this particular platform offers for sale the kind of crypto asset you want to buy. In case you're looking into buying Bitcoin or Ethereum, basically any kind of platform will suffice. However, if you're the kind of person that is hunting for the next hidden gem that is going to 100x or 1000x your money, then you might need to dig a bit more and look for a particular exchange that offers that secret crypto token. Next very important feature is, of course, the fees, as of course all these platforms are trying to make money. When you deposit your money, when you convert, or when you want to withdraw, in most of the cases you have to pay some kind of fees. If you're new to crypto, it might be also pretty important that you have an interface that is easy to handle, with not too much data, just the kind of information that you need. So here you might also make a difference. And last but not least, of course, the safety and the regulatory aspects of these platforms. So in this video, I'm not going to deep dive on a comparison, but I will do a follow-up when I will benchmark these kind of platforms against each other. Just to give you a brief overview. So Coinbase is actually listed on an American stock exchange. So this is, I would say, probably the most reliable platform. It also has a very simple user interface if you register on traditional Coinbase. However, if you want to reduce your fees, you should use Coinbase Pro. Binance is very interesting for me because of the insane amount of assets and the ecosystem that they offer. It also has very friendly fees and a lot of features that you can do with this platform. Recently, I'm also a huge fan of the Swissborg platform, and here I would like to shout out to Thomas Slater, who commented and recommended for me to check out this platform. So Thomas, cool, thank you. To be honest, Swissborg offers far less assets than the other platforms I mentioned. However, it has an amazing feature which is allowing you to earn passive income on your crypto on a daily basis, leading to actually quite a nice compound interest. If you want to get started with these platforms, I would like to kindly ask you to use my referral links from the description below, so we can both earn a nice referral bonus. So before you register on these platforms and make your first purchase, I would highly recommend that you create a new email account that is secure and you only use it for the purpose of cryptocurrencies to avoid any kind of problems of somehow other people getting access to your digital assets. I also strongly suggest that you go into your Play Store and download Google Authenticator, because it will allow an additional layer of security for you to access your stuff. Registering on the platforms is fairly easy. You will just need to give regular information about yourself, like your name, email address, and in most of the cases you will also be required to create a photo of your personal ID and a selfie, so there's kind of a system that can make sure that you are the owner of your account. Now this is known as KYC verification, or Know Your Customer. This basically enables authorities to link the personal identity to crypto ownership, and this is kind of a direction that is probably going to expand in the future to prevent illicit activities. Now, of course, so far this is not required by all of the exchanges. However, if you're a beginner, you want to have a platform that is probably more reliable, and most of the platforms that are more regulated will offer you more security, and these kind of platforms will require KYC verification. This verification doesn't take long. Typically in half an hour or so you can get your account verified, and once you have your two-factor authentication set up, first thing you just need to do is transfer funds to your account. Now, different platforms allow you to deposit different kind of currencies. However, if you're in Europe, probably from the fee perspective, you're the best off if you deposit euros. And for this, my trick is to use Revolut, because it offers you a nice conversion rate. If you live in a country where you don't use euros, you can convert it to euros, and also the deposition is very, very fast. If you use Swissborg, your money arrives basically immediately. In the case of Coinbase and Binance, I noticed that there's a couple of minutes or up to half an hour time that it takes until your money arrives. Once your money arrives to your account, you can make your first purchase. Now, if you transferred a larger amount, then I would suggest that you don't immediately spend all of it on one kind of cryptocurrency. In crypto, the prices tend to fluctuate a lot, and according to Murphy's Law, once you buy one, it will immediately drop. So the best way to go forward is to put regularly a smaller amount of money into it, and with this you can average out the price. And this is actually called dollar cost averaging, DCA, which is, I would say, a very standardly used way of investing money into volatile assets. Congratulations, you made your first purchase. Now, the next step is to decide what to do with this money and where to store this. Now, if you're a beginner and you're just getting started and you don't have too much money at stake, probably the easiest way is just to keep it on the exchange. The advantage of this is that you will have always very close access to your crypto in case you want to sell it, and you don't have to spend time and money on transferring it somewhere else. However, you have to keep in mind that not your keys, not your crypto. If you keep it on the exchange, it's not exactly your own, And if whatever happens to the exchange or somebody enters your account, well, then again, you're at risk of losing your assets. So a safer way forward is to store your crypto in a hot or cold wallet. A wallet is basically much like a real wallet where you can store your cryptocurrency, but you have a private key and it's really under your ownership. The risk here is that you have to pay any kind of transfer fees, which in crypto can be actually quite high, as well as if you want to buy a cold wallet, which is like a hardware wallet, these are also not so cheap, as well as if you lose the code to your wallet or your password, well, you're done, you just lost your money. Another option to store your crypto is through staking. Staking is offered by a range of newer generation cryptocurrencies such as Cardano, BNB, Polkadot, Avalanche, etc. When you're staking your crypto, you're basically locking it up, much like in a bank account when you want to get some interest. The staked crypto will then be used to validate the transactions on a network. It's much like mining in the case of Bitcoin, but generally it's more energy efficient. The rules of staking are different in different kind of proof of stake cryptocurrencies. However, in general, you get a percentage anywhere between 5 to can be sometimes even over 20% per year in the native cryptocurrency that you use. This is particularly interesting because it can compound very well, because not only the value of the cryptocurrency can increase, but you get more cryptocurrency. So it's basically adding up, which is very attractive for a lot of proof of stake cryptos. Last but not least, you can also keep your crypto in some sort of an interest account. In these kind of platforms, you're basically providing your cryptocurrency to an entity, which is then doing all sort of economic activities with your crypto, and you get kind of a percentage in exchange for that. Now again, BlockFi and Swissborg are two examples here where they give approximately 3, 4, 5% yield on an annual basis for Bitcoin, Ethereum and more traditional crypto, as well as around 8%-ish currently for stable coins like Tether and USDC. So if you want to get started with these platforms, please again use my link in the description down below. And if you fund your account with $100, then we both of us will get some kind of nice referral bonus. So that's it for this video. I hope you liked and enjoyed it. Please like and subscribe if you enjoyed the content so I can share more. And please let me know in the comments below if you enjoyed this, if you want to learn more about a particular topic, if you have any kind of feedback. I'm very, very interested and open to hear from you. In the future, I hope I will be making more videos more often. So see you next time. Bye-bye.